We have been seeing very thin volumes that have been driving the markets over the past couple of days. Do you think that it's here to stay at this point, or do you think that once we start seeing a bit more resolution out of Europe, that market players are going to head back into the market?
Yeah, I think that's right. Certainly as the volatilities come off a little bit, then I think you'll find that the longer-term investors will return to the market. Currently, certainly the players in the market are focusing on the day-to-day news flows, day-to-day earnings results, day-to-day economic numbers, and reacting in a quite a hectic fashion to that. So I think a lot of smaller private client type investors have shied away from the market because of fears of calling the market incorrectly. So I do believe it will steady out. And going into the year end, I think we'll probably find that those funds with a lot of cash will come back to the market and the market will steady down.
So at the time where a lot of people are quite cautious, what are you doing right now, Craig?
Yeah, in terms of our portfolios, we're probably sitting in our equity long portfolios with a cash of around about 9%. That's not because we try to be particularly defensive, but rather waiting for opportunities. I think on the local market, valuations are not particularly cheap, so our focus would rather tend to be looking towards offshore stocks. I think SA Breweries today is reported today. I think there's a good example on a 2012 forward earnings basis, PE, around about 14.8, I think 14.9 times earnings. You've got InBev on a similar type PE, but you can buy Heineken and the other brewers on PEs of between 10 and 12 times earnings. So they look to better value the offshore stocks.
What do you make of SAB as a company to buy at this point in time in South Africa? I mean, it's down 1.3% today. Market not really responding to the news in a positive fashion, and at around 284.40 cents.
Yeah, I would think it looks expensive at these levels, and while we do hold it in our portfolios, I certainly wouldn't be adding to it at these levels. I think that there's been perhaps a little bit of deal premium built in there. There was speculation that InBev might come and make a bid for breweries. I think breweries have been very good in blocking that by making a few acquisitions to make it more difficult. So I think it is looking expensive. I must say, if you look at those numbers, they're continuing to battle in America, and they're finding Europe difficult as well. What was impressive, though, was the growth that they're experiencing in the African markets, where sort of premium lager beer growth is in the sort of 30% level, and the other beer markets are growing at around about between the 20 and 30%. So breweries have committed to invest a further 250 million rand dollars into Africa, and that's over and above the $1.5 billion that have already been invested. So I think there is a good market there, and it's the old stuck record story. Emerging markets are where the growth is, and certainly breweries do have a good penetration in those markets. So I certainly would not sell the stock, but it does look a little expensive for me at these levels.
Well, let's just touch on another stock that is in the emerging market space but not performing very well today. Implats is down 4.7%. We saw the first quarter gross platinum production declining by 12%. The market not liking the news. We know that they really had issues that came to the fore because of safety stoppages, something that the industry as a whole is really grappling with. And then thrown into that, cost per ounce is also not looking very attractive right now. Would Impala be a stock that you'd buy right now? Are you bullish on the platinum price going forward?
Yeah, I think with the platinum price itself, I am bullish. I think I wouldn't be surprised to see platinum trading above $2,000 going into next year. Impala, I think for myself and for our organization, carries risk in that they are dependent to a large degree on their long-term reserves on their Zimbabwean operations. And I think like all the other platinum stocks, they've battled with cost pressures from the labor, from the unions, and at the same time, obviously, electricity is a large component of the input costs. Their refining operations and smelters. So it's tough for them. The costs are rising. I suppose in rand terms, although the platinum price has picked up, it certainly hasn't probably picked up as much as the costs have risen. So Impala is not my preferred choice at the moment. I think I would probably play it a little bit more defensively and look at Amplats. And for those with a longer term, more speculative bent, probably something like Northern with the Boysendal development looking like it's progressing relatively well, and they managed to secure funding for that development for the medium term. So I think there's been some buying in that stock the last 2 days. So those would be the two stocks I would look at in the
Okay.
sector.
Well, what about Investec? Because Investec has had a dire day. Limited is down 3.3%, PLC shedding around 3% and posting a 2% decline today in first half earnings. Private banking business, a very big issue. Property, also a very big issue in Ireland and in Australia.
Yeah, look, the banking space has been a very, very tough space to be in the last couple of years. One of my colleagues, interestingly enough, said, what's the definition of a stock that's fallen by 95%? And we asked why. She said, well, it's a stock that's fallen by 90% and then halved again from there. And I think that's the problem. You've had a lot of these banks, particularly European banks, falling by 90%. You think they look good value, you buy them, and before you know it, you're down another 50%. So it's in a difficult space, and Investec, being a bank that's located in Europe now or in the UK, is affected by the negative sentiment that flows in the sector. Today, I think what unnerved the markets was that the British government announced that they were going to sell their stake in Northern Rock to Virgin Banking. And I think that maybe spooked the market in that it probably indicated that things are still not great in the sector. From my point of view, if I look at those Investec numbers, what I thought were very, very good was the asset management business is growing strongly. The profits were up 36% in that area. And more than 2/3 of Investec's revenues now come from annuity-based fees and commissions. So I think that's a very, very stable base to grow from. And they appear to have kept their costs reasonably under control. Yes. As you mentioned, obviously private banking with the exposure to the Gulf estates has hurt them. And they've pulled back on their proprietary trading and investment banking operations, which are highly capital intensive, which obviously affected the bottom line. Yeah. But I think if we went back into a strong bull market, I think Investec would do very, very well. But I think for now, in the short term, probably will be an underperformer in line with the rest of the banking stocks. But longer term, I think there is good value there.